need to recognize what is happening, what are all those inputs, and then we have to pass along those costs to the consumer, otherwise you're just not going to survive. Hey, I'm Spencer Powell and welcome back to Builder Funnel TV, where remodelers and custom builders come to grow their businesses. If you're not part of the remodeler growth community, go check it out, remodelercommunity.com. We're having conversations like the one we're going to talk about today, which is inflation, all the time. So head over there, remodelercommunity.com. All right, so let's talk about inflation. I tend to watch what's going on with investing and kind of the economy and a bunch of stuff like that. So we're going to get into some numbers, maybe nerd out a little bit. But what I really want to do is tie back to what's going on and then what should we do about it. So first thing, inflation is the real deal right now. December numbers posted at 7% inflation, so year over year. I think normally the Fed tries to keep that at around like 2%, maybe 3%. I think 2% is the number that they shoot for. And so 7 is significantly higher than that. I believe it's also the highest we've seen in about 40 years. So pretty significant. These numbers are coming from, this is based on the CPI. These are coming from the U.S. Bureau of Labor Statistics. If you follow a lot of this stuff like I do, then maybe your guess is that inflation is actually a lot higher than that. I'd love to hear your comments below. Go ahead and drop a comment below. What do you think inflation is really? Is it higher or lower than 7%? If you're like me, you think it's higher, I would guess it's probably between 15 and 25%. Some people that I follow think it's 30 or something like that, but I think it's safely around 15%, maybe even closer to 20, because when you break down the CPI and you look at what they're including in those numbers and the way it's weighted and skewed, like all you have to do is go to the grocery store, go to the gas pump. You're feeling it all the time with material costs like the price of lumber, copper, all these types of things. And you're going, these aren't up 7%. They're up double, triple, quadruple, 50%, is probably a low number for some material costs going up, whether that's year over year or just over the last like 18 to 24 months. So basically that leads us to why are we feeling that? And really it comes down to money printing. We've printed like 40% of the total money supply over the last like 12 months, which is a lot. You can see here when you're looking at it, those last 2 years, it goes like parabolic up and to the right when you're looking at this chart. And it's pretty rough. It's pretty rough. So what does that mean? It means that we're seeing increased material costs, increased labor costs. Probably all of your suppliers, you've seen increased rates across the board in some capacity, whether it's a product or a service or whatever it is. And so in order for you to survive, you have to pass those costs on to the consumer because otherwise it just doesn't work. And unfortunately, I think this put a lot of people in a tough spot in 2021. They had banner revenue years, but they had really poor profitability years. And that's because they maybe hadn't updated the contract. And so it was a fixed price contract, and then prices jumped through the roof and you kind of had to eat those costs, or you had all these like supply chain delays, which are kind of loosely related to some of the inflation issues that we're dealing with. But that also impacted profitability because you had people on site, tools on site, machinery on site, dumpster on site that for longer than you anticipated. And so all those costs started to rack up. And so it really ended up being a bummer in a lot of those situations because you had really, really strong revenue numbers and poor profitability numbers. And so at the end of the day, we need to recognize what is happening, what are all those inputs, and then we have to pass along those costs to the consumer, otherwise you're just not going to survive. So the other interesting thing about inflation is that if you have a lot of debt, then that is actually being eroded by inflation. So that's a positive thing. So if you have, business debt, if you have real estate debt, even if you have, car debt or student loan debt, the dollars are the same, but the dollars are getting worth less and less every single year. And so If you're looking at 7% inflation, if you have $100,000 worth of debt, wait a year, and it really is only about $93,000 worth of debt in terms of actual purchasing power. So if you have fixed rate debt, like a mortgage at 3 or 4%, and inflation is 7%, you're actually getting paid to borrow money. So this is where this kind of gets interesting, because we have really high inflation, but we have really low rates. And so the way I've come to kind of figure is, don't fight the system, just work within the rules and the guidelines. So it's kind of like playing hot potato right now when you have cash, because savers are being punished. Like if you're holding cash, it's just losing value every single day. And so you're almost better off just spending it on something that gives you utility, or investing it in something that's going to grow. And obviously you need some amount of cash, to weather storms and having reserves and that sort of thing. But it's really a tough game to be playing right now, because you don't actually want that much of it, because it's just losing value. It's better to be invested in, real estate, crypto, stock market, those types of things, or spending it on something like investing in your business on, new trucks, new equipment, things like that are going to help grow your business and propel you forward, and maybe like grow your income so that you can fight against inflation. With all that being said, I think this is going to be a pretty interesting year. They also said they're trying to do 4 rate hikes throughout the year. I doubt that those could be super large, because if they raise the rates a ton, it's going to throw a lot of wrenches into the system, and that might collapse some things, which they don't want to do. So it's probably going to be, hey, we're probably going to try to slow inflation. We're not going to try to cut it too much. Again, I'm not an economist. I just follow this stuff and pay attention to it. So just take whatever I say and just throw it out the window. But these are some predictions and some things that I think might happen. So at the end of the day, kind of to summarize where we're at, inflation is here. It's pretty rough right now. Savers are being punished. So you want to invest in your business or invest in other assets if you can, to help either grow your income or grow your wealth. And then you've got to look at all those inputs coming into you and just say, hey, I've got to make sure I'm charging enough. There's a lot of demand, so let's make sure I'm landing the best margin projects and I'm super profitable. And don't worry so much about growing revenue as making sure that you're bringing in good projects and making money on those projects, because I don't want you to be the type of company that has a record revenue year and no profitability to show for it. That's one of the most frustrating things that you can go through. So that is what's going on in my head in terms of inflation. Again, if you want to join conversations like this around what to do, how to make business decisions in this type of environment, we've got a whole group of remodelers talking about stuff like this in Remodeler Growth Community. We'll drop the link below for you to check that out. As always, thanks for joining, and we'll see you next time here on Builder Funnel TV.